That's how you manage the risk and hedge. Now, coming to a point where you asked the question saying, if you were mentoring a founder, how would founder feel comfortable in getting into discussion on negotiation? See, there are 2, 3 stages. One is where the founder has lot many choices and how he deals with it.
Yeah.
Second is where founder has limited choices and how he deals with it. In a situation where he's in demand, it's a demand supply situation, whether it's the job market or it's the startup market. It's a game of negotiation and demand supply.
Yep.
When market is hot, everybody gets lot many deals. They go by what is most lucrative to them. But when market is not as hot, most of the time founders think they are compromising and correcting their value. We generally tell them saying, if you are sitting with 90% equity of a 50 crore company versus you're sitting on an 80% equity of a 500 crore company, which one would you prefer? If this partner can bring you that value, giving you, infusing capital at the right time and connecting you with the right mentors and right people in the market by showcasing your company, that's where collectively you are part of a bigger pie, even with reduced equity. And that's what matters, right? So if you keep those principles in mind, the founders understand, and hence their approach to go with that subject is better, right? And in case where you can't reach to a conclusive discussion between the fund house and the startup, then you go for convertible notes, right? Where you define your upper limit and lower limits.
Correct.
And you do investment through, discounting method. In which case there is no discussion on valuation. Discussion on valuation will be happening in the next round. These are generally a good midpoints on which a complex negotiation can be closed.
Can be close. Yeah. Thanks, Vikrant. Chakrapani garu, I think we will be, slowly concluding this session by taking the wisdom out of it. But I know you have seen very interesting examples of how a startup company is almost like went belly bust, and then with the wisdom of some of the mentors, they became really big. I would like you to actually share one case study of that for motivating some of the people here to see how to look at companies which are almost like about to die and then can still raise like a phoenix.
Yeah, all of them have pointed out. One, at the early stage funding, it is not the valuation that is important. Like Gaurav said, it's the money that is, how much money he needs,
Yeah.
how much money that promoter needs, and what kind of dilution. Like Naidu Garu said, if you ask for more equity at early stage,
Yeah.
this is a negotiation point. But then you also, once you get on to, as a VC, as early stage funding, you're partners. You're no longer an investor and a promoter kind of relation.
Right.
Promoter also looks at it that way. We also tell them, now get a good partner on board. Don't look at your valuation. You're looking for a certain amount of money. Get that money in because you can survive. You have a runway for next 2 years or so. You can go to the next level. That's where you create a valuation. Your value for your company. That idea, you can go to market and you can freeze your ideas. You come up with the product at one stage. Otherwise, what happens is many stages I've seen, like you are asking, there was a company that they went through some round of somebody acquired, promising big money, did nothing, they came out, they started all over again, they had no money, they're feeling shy to talk to people. That's when, of course, IIT Madras thing. So I got them and what I discussed with them, I said, what is wrong with you? Let's discuss. Of course, it's product related to us, some vision-based construction monitoring technology. They are looking at getting, let us say, millimeter level of accuracy. I said, from centimeter you got, from here to there, you took, let's say, 2 years now, it will take 10 years to get to that point. Yeah. You'll just perish. You'll just disappear in next 1 year. Because there's no money with you. And it's time to get money also. Both they are feeling shy. Is it too early to go to market? And we don't need money. I said, what do you mean you don't need money? Test the markets. Take money when the money comes. Because otherwise it's very difficult. I think all of them agree with me.
Yeah.
As a promoter, you have to take money when the money comes.
Correct.
Otherwise it's very difficult to that balance
Timing.
both.
Timing.
When you need and the market is ready to give, is very difficult.
Correct.
So when the money comes, take it. I said, so test the market. I took them to another a group member who was actually by then became a unicorn,
Yeah.
also an investment banker. I said, let's sit down and discuss. We discussed, and then we took them to a right investor. He invested money, and they signed the term sheet. You know that markets dried up sometime back.
immediately.
3
Funding
months
winter and
from
all that
then,
happened. Yeah, yeah.
funding stopped. Suddenly, the market, there's no money in the market. I mean, the two things that I said, right, that is very important. Early stage, you don't look for your valuation. Look at the money you need. You have to convince the investor that this is the money you need. And get the right kind of partners. In fact, it's very valuable. The right partner took them to a much bigger level now. Next level, they said, this idea is excellent. Indian contractors don't pay, you're getting exciting volume. You get very good credentials, but they don't pay you. They said, okay, let's move your corporate to US. Let India can be your subsidiary or back-end office. That idea changed the whole perception. Last 2 years, they've gone through the roof, so they're doing extremely well. And probably next 1 year, they'll
Yeah.
do it probably
No,
15 times the
I was
valuation.
very
that we all
excited to
invested.
hear that, when $1 million to 50 million in 2 years, great case study, I thought. So, in conclusion, thank you for that, case study, sir. Nayudu garu, I would like